And if you go back and you look at the minutes of the Federal Reserve meetings, that word through 2020 and 2021 is used over and over and over again. And they used it as an excuse to not raise interest rates. What raising interest rates would have done, it would have just slowed the momentum. It would have made it so you don't have too many dollars chasing too few goods. And so we lived through 2020, we lived through 2021, rates were super, super low. The Fed kept saying inflation's transitory, and then 2022 hits, and I think there just was a time where everyone's like, this inflation's not going away.
That's right.
We got to do something. So what they do is they raise rates extremely fast through 2022. And it just caused all kinds of problems in the banking industry. We saw that through the failure of Silicon Valley Bank.
The very latest on economic development, workforce, and industry sector news in Southern Colorado. Here is Business Digest Weekly with our host, Dirk Hobbs.
All right, good Friday afternoon, ladies and gentlemen. Welcome to Business Digest Weekly. I'm your host, Dirk Hobbs. I'm hanging out with Mr. Brett Wyss from Integrity Bank. We'll get to him in just a moment, but want to welcome you to the program. And before we get underway here, I want to give a shout out and a noticum of gratitude to our friends at Colorado Springs Orthopedic Group for underwriting this program. That's why we get to meet people like Brett Wyss here in the studio, and we get to probe their minds for information and understanding about the world around us. Today, we get to talk about the banking industry and a number of other things that impact the way we manage our money and business. And, we're going to get into a couple of interesting topics. We're going to talk about interest rates a little bit, some of the Colorado Springs real estate market, and then a little bit about inflation. So we're going to get Brett's take on some of those items as well as others. But before we get underway, I want to give another shout out to my team at Colorado Media Group. They did a fabulous job putting on a world-class event a couple weeks ago called the 40 Under 40. And if you're interested in meeting some of Southeast Colorado's amazing young business leaders, these are the folks that are up and coming. And right now, they are taking positions from the head of universities to, aerospace and defense companies, cybersecurity companies, you name it. They've got a handle on a lot that's going on out there. And they're emerging. They're under our tutelage right now, a great many of them. Some of them are leading their respective organizations, but this class of 2025 was absolutely extraordinary. We had the likes of Dr. Manya Whitaker at Colorado College, a young interim president right now, and she's vying for the job there full time. We had folks from BlueStack and television, entertainment. We had oil and gas folks in there, as well as some of the other advanced manufacturing companies that are out here. And one of the main compliments we got that particular morning was the fact that it was not always the usual suspects that were up there. These were people that a lot of folks haven't heard of before and haven't seen. And that's partially because we recruited candidates from all throughout Southeast Colorado. So we got folks from Trinidad, Canyon City, Pueblo, even Denver. That came in here. A lot of them were from Colorado Springs and Teller County, but we had a tremendous showing of support for these folks. About 350 folks showed up. We celebrated 40 individuals in their remarkable credentials. And it wasn't a one-dimensional celebration. Each of these folks had an amazing level of commitment in every aspect of their life. So we looked at their community service, their professional and personal development. And they went through this pretty rigorous rubric to get to where they were selected by a committee outside of Colorado Media Group that their names were redacted, the companies were redacted, and they had an opportunity just to view some person and what they were doing in their community. And these particular 40 out of several hundred rose to the top, and it was really fun to watch. These folks come across the stage, take a bow. But the good news there is, folks, we have a lot of depth on the bench here, and I'm excited about that. And we're going to be doing something at the end of the year to respect and honor those on the other end of the spectrum who have kind of blazed a trail for us here. I think a community that respects, it's the folks that have carved a way for us and the ones that are coming up behind us. I think that's a community that people tend to lean in on, and they tend to respect, and they plant their roots here, and they become stewards of the mission here of, creating a vibrant economy. So that's exactly what this whole celebration was about. It's called the 40 Under 40. If you want to go see who these folks are, go to socodigest.com, and you could meet these 40 extraordinary individuals. Well, let's get underway here. I have the president and CEO of Integrity Bank and Trust with me, Mr. Brett Wyss, and I'm really glad you're here, sir. Good morning.
Good morning, Dirk. It's great to be here with you.
It's great to have you here, sir. And this is a very personal business to you. It's a family business.
That's right.
Give us a little background on how this got started for you.
Yeah. So my family moved to the Colorado Springs area, Monument first, in the late 70s.
Okay.
So right before I was born, my parents got here and I was born. So I'm a true native, born and raised in the Monument area.
I've met one.
Yeah. Well, and, even not just Colorado Springs, but Monument. I tell people often, like, hey, I'm a Monument native.
Wow.
There's three of us, and
there's three.
The other two are my siblings. So, So my dad was a Kansas guy and worked for a family that owned banks, and ran into that family and said, hey, would you go to Colorado Springs and help run one of my banks that I just purchased out there? And so he spent about 25 years with People's National Bank, which has subsequently sold, and so no longer in the market here. But and then in the early 2000s, got together with my uncle, and we're like, hey, can we do this? We can do this. Mm-hmm. And, I think it's just one of those good entrepreneurial stories where they put their capital together, got some investors, and opened up a bank from scratch. And, in 2003 is when we opened, and it was a different environment then, a lot easier to open a bank at that time, at least from a capital perspective. And so they were able to pull it together.
That's good.
We started off a small bank, and here we are almost 22 years later.
22 years later. Well,
That's
congratulations. Right. You planted your flag. How many storefronts do you have today?
So we've got 4 bank locations. We're mostly northeast El Paso County, but I'm excited to announce that we are moving downtown. And so
downtown Colorado Springs.
Yep. We have a location that I purchased a year ago, and I just got my building permit last year. And so we're going to do some renovations on the building there and do something a little different. I've got a 850 square foot old Victorian house from the early 1900s that I'm going to turn into a bank.
No kidding.
Yeah.
All right.
And so it's going to look different than traditionally what we've seen, but I really think it's going to be a nice addition to downtown Colorado Springs.
I would agree.
Yeah.
So how does a family look at a particular community and say, we want to do banking a different way? What were some of the things that your father and your cohort that decided to plant their flag here? What were some of the things you guys were looking at and said, this is how we're going to do banking in Colorado Springs?
Yeah, that's a great question. My, my dad was a construction lender in his career.
Got it.
And first, the idea of just being in the right type of community where there's activity and there's growth, and Colorado Springs certainly fell in the right spot there. He had contacts there.
No doubt.
But then, there's something about this community, the small town feel, even as we continue to grow, where I just find a lot of opportunity and a lot of value for people that want to do business with a person, not an institution, and want to do business with a group that has similar values. Mm-hmm. And so the things my family has valued, honesty, hard work, adversity, the ability to get through adversity.
That's right.
That's what we found here in Colorado Springs. And it's where we had been for a while. And so this is what we chose. And so I think there's always a good niche for people that want to do business with like-minded people.
No question about it. And, this is a very relational community, and particularly in business. most of the business operators and folks that are planting their flag in their respective industries, they get to be known fairly quickly. And it does come down to personal relationships a lot of the time. Did you guys, like you said, you had, I'm sure, some trials and tribulations along the way, but at the end of the day, what are some of the key hallmarks that were you a natural fit for this? I mean, as a young student, did you say, yeah, I'm doing the banking thing?
Well, no.
Okay.
Quite the opposite.
Got it.
Which it's kind of a fun story. And especially as I talk to, you mentioned you're 40 under 40.
Yeah.
And I love to hear those stories. I would like to think I still fit into that 40 under 40 category, but unfortunately I'm
not anymore, huh?
I'm past that by a little ways. But talking to young people all the time, like, man, I don't know what to do. And I've got a daughter about ready to graduate high school, and Dad, I don't know what I want to be yet. And my advice is always, that's okay. Right. So I went to college in the Chicago area.
Okay.
Mostly because I wanted to play football. And so
right on.
I loved sports and athletics. And so I went there and played football and was a little bit undecisive on where I wanted to go career-wise. I ended up getting a geology degree and was a high school science teacher.
No kidding.
So
wow.
I spent about 3 years out of college doing that. And then when my dad and uncle announced that they were going to open a bank, I was the only of my siblings that took them up on it. And so, I didn't have at the time a formal finance background or a business background.
Got it.
But I think, like I said, some of those other core values really fit well. Hard work. And I'm a self-learner. I love to read. And so it was easy for me to get motivated to learn what I'm doing in the industry. And so, all that to say, keep your options open.
Absolutely.
And you never know when opportunity knocks. And, one of my favorite quotes by Louis Pasteur, chance favors the prepared mind. And so
Amen,
if your mind is ready and open, then there's all kinds of opportunities.
All kinds of opportunities. Well, I'd love to see how you dialed in and ultimately you took the reins at Integrity Bank and Trust. And we're back with Brett Wyss, and we're going to get into a deeper dive on some of the business matters here in town. And if you're a business owner, small business owner, land developer, larger business owner, and you're looking for opportunities, of course, they have retail banking as well. But let's get a look under the hood at how he sees the landscape in front of us as of today. We're firmly under a Trump administration. We're moving forward into the next 4 years, and we'll see how that goes. And but I'd like to see how he views the landscape ahead of us coming up in the next quarter. We're back in a moment with Business Digest Weekly.
My experience with Colorado Springs Orthopedic Group has been top-notch. The whole orthopedic group, they've worked very well together. Even when I've gone through PT or needed to get my collar prosthetic, everybody's been just right on top of it. It's all centralized and the communications have been awesome. Even though I had my nervousness about going into surgery, I was still very confident. I knew I was going to be okay. Colorado Springs Orthopedic Group is definitely getting me back to my life and the things that I want to do.
All right, we're back here. Second quarter Business Digest Weekly. Is it a March 7th? We are headlong into spring already, folks. I mean, it seems like just yesterday we were singing Christmas carols and ringing in the new year. And here we are at the end of Q1 2025. Good grief. Well, across the board for me, we have President and CEO of Integrity Bank and Trust, Mr. Brett Wyss. And we just got to know him a little bit and his background. His father and family started a bank out here, and it was called People's Bank, right? Originally, or
my dad went to work for the family that owned People's Bank.
Got it.
That's what brought him to Colorado Springs.
Okay.
Yeah.
And then you guys planted your flag in what year here?
Opened the doors in 2003.
2003.
Yep. Started in Monument.
Okay. Integrity Bank and Trust. So you've seen them on the north side of the community And now they're going to have some operations downtown Colorado Springs. We'll underscore that in just a minute as well. So if you want to take a look at them online, go to integritybankandtrust.com. If you want to give them a call, 719-487-3034. All right, Brett, we were talking about, how does one become a banker? And you were in the family business, basically. Your father started the bank here, and with some great leaders and some other investors. You guys planted your flag in 2003. You opened the doors. And in 2004, you joined the family business.
That's right.
Okay.
Yeah, came from the Chicago area, left my teaching job and came and started working. I started out just as a credit analyst, so looking at loan deals. Okay,
and you're a quick study, so a lot of this came to you pretty readily. Now, you, as a young banker at that time, you may not have called yourself a banker, but you cut your teeth during a particularly difficult season, and this is what I really appreciate about this particular story, because it wasn't rainbows and golfing, outings and lunches all the time. I mean, you guys really worked through a very difficult season, and you stuck with it. You cut your teeth. You learned how the downside of banking looks in that first recession.
Yeah, it was a time that I'll never forget. My wife and I moved out here. I moved back in 2004. And it was just go, go, go during that time. We were a brand new business. A lot of times bankers will put money together and go buy a charter or an existing institution.
Got it.
That's more common. We started one from scratch. So we had no deposits. We had no loans. So as all small businesses that are new need to do, you got to get to this critical mass where you're making money and you've got the momentum and the contacts. And so those first few years were just, we were doing deals like crazy and making contacts. And then 2008 hit and the recession hit and everything just changed. And all of a sudden, you couldn't make a bad real estate loan because of a hot real estate market to where you didn't know if any of them were going to be good anymore. And so learning in an environment like that was critical for me. In good times, it's really easy to develop bad habits. And there was some of that creeping in, and then the recession hit, and we're able to look at our policies, our procedures, our practices, and really refine things, all in the midst of working through difficult deals, not with just, borrowers we didn't know, but with our neighbors. Yeah. And it was a tough time.
Yeah. What are some of the pearls you took from that? Pearls of wisdom, if you will.
Yeah. So it's easier to say no up front than to take a house back or something. Business discipline. Even when times feel good, you develop policies and procedures because things happen, right? We had all kinds of stuff happen where we'd say, okay, we need a policy around that. And then times get good again and you forget, why did we do that again? Why did we say that we're going to underwrite loans this way? And so the need to stay disciplined even when things are good. I think the other piece was, and when people ask about the history of integrity, this is one of the things I always come back and say, this is one of the things I'm most proud of, was dealing with people when deals are bad is very difficult. And there are so many things at play, and treating people with dignity, respect, no matter what the situation. We took the mentality, if people work with us, we're going to do everything we can to work with them and work through their deal, even if it meant a little bit of less profit for us or whatever. And so I loved that lesson, the humanity of dealing with difficult things during the recession, because it's made me a better person and appreciate relationally what's going on when people's businesses are struggling or something didn't turn out the way they thought. So those were fantastic lessons.
Probably sharpened your intuition as well as you're reading business plans and things like that and looking at financial statements and seeing, the math either does or doesn't add up here. And,
right.
And like you said, it's probably better to say no on the front than get sideways downstream.
It is easier for sure.
So when did you start to see the the sky open up a little bit after that recession?
Yeah. So, I mean, you look at the recession, it was really kind of contained to 2008, 2009, a little bit into 2010. We dealt with it all the way up until, 2014 was probably when I said, we're totally out. That's in the rearview mirror.
Okay.
Because we had so many properties that we'd either taken back or people had, given up and said, throw the proverbial keys on the desk. That happened to us a lot. And so you take those back and you have to work through them. So they just hang around for a while. So it took a while. It was a good 5-6 years for us until we were able to just say, that's totally behind us and done.
And then we just had another season where you couldn't go wrong. I mean, you threw a dart and you hit a deal. Were you guys able to keep your balance and keep your disciplines?
Yeah, we were. And, I look at our economy right now and look through my loan portfolio, the decisions we've made, and I feel very, very comfortable and optimistic. So,
very good.
But there's different lessons. So you rewind to 2023 and, even go back to 2020 and all the things that have happened as a result of COVID that have affected interest rates and inflation. We're learning and relearning different lessons right now as an industry, as a bank, than the ones we learned during the recession. They're two separate items that are both could be difficult for banks to navigate, which we're actually seeing. So,
what advice do you have for businesses right now as they're starting to shore up? I mean, what looks to be the eve of maybe a season of a little bit of prosperity. I wouldn't go so far as to say we're in the 90s again, but it looks like some things are going to open up. There's some disciplines on the governmental front, at least it appears so. And we seem to be more focused and more intentional about breaking down the debt, paying, understanding the deal flow that we have with other nations. How do you view this, Brett, and how that trickles down to kind of the local disciplines that we need to deploy?
Yeah, I look at our current environment and I think there's a tremendous amount of opportunity out there.
Okay.
For me personally, for Integrity Bank, we are looking for new opportunities.
Okay.
In good times, one of the things I like to do is try to diversify revenue streams. I think that's just a good business practice. And so we've started some additional divisions in the bank. I hired a SBA lender last year and had done virtually no SBA lending and thought, there's you look at your 40 under 40 list. There's entrepreneurs in Colorado Springs that need capital, right? And for us to really not have much activity on the small business lending front doesn't make a lot of sense. And so in good times like this, I'm looking for ways to start new streams of revenue, new business lines. And so that's part of the advice that I would give is if you're all into a concentration or an industry or a product line, and we're in a decent market right now where there's opportunity to expand, I think business owners should go for it.
Yep.
If you're dependent on one thing and something happens in that area, like we saw during the recession,
That's right.
Real estate lending, that's kind of what we did, and it was very painful. So back to those lessons learned.
Well, I appreciate it. And our landscape here in Southeast Colorado is diversifying. Our industry sectors are evolving. So you got cybersecurity, advanced manufacturing, aerospace and defense, but you also have some of these other subsets, hospitality, tourism, entertainment on the north end as well. And there is opportunity in various little segments that you can go after. Are you seeing yourself well positioned as a bank to address that level of diversity in the market?
Yeah, we continue to reach out to different industries. I'm a firm believer in staying within your core competencies, and as you branch out, you got to go find the experts.
That's right.
Right, and so I've done a great job, I think, of finding other lenders that have come on board with Integrity that understand some of these other sectors and the connections we've made. And so, looking at the opportunity in a market, so much of it's about relationships and trying to develop those relationships within those different opportunities that you might not be in. And so a lot of groundwork's been laid as far as that to position ourselves to help and come alongside some of these new industries, such as the entertainment scene we're seeing up north.
Yeah. That's been something to watch.
It's been fascinating. It's been great. I love it for our town.
Me too. Well, we're going to allow you to flex your muscles on some of the topics that you're very familiar with. Obviously, interest rates, the real estate market itself, and inflation, and how you view those things, Brett, in the second half of the show here. We're hanging out with Brett Wyss. He is the president and CEO of Integrity Bank. If you want to look at him online, integritybankandtrust.com. If you want to give him a ring, 719-487-3034. These are great people. Very, very strong bank on the north end of town, and they're also going to put a box downtown in a new little Victorian place downtown. That's going to be fun to watch. So congratulations on that. But we're back with Brett in just a moment. All right, we're back here, second half, third quarter of Business Digest Weekly, and we had a sidebar conversation here that I want you folks to hear, because this is really where these types of interviews really lend business owners, even just your practical homeowner, your average John Q. citizen out there, really understand some of the fundamentals of how interest rates work and how we got here and where we think they're going and why. And I want to give you a lot of runway here, Brett, because you've got a really good beat on this, philosophically and otherwise, and practically. And I really want folks to hear how you think we got here as it relates to interest rates, because you want to go back to almost 2008, I think.
Yeah, or even before that. I mean, early 2000s,
okay.
You look at interest rates, the dot-com bubble busts.
That's right, yeah.
We hit recession, and the Fed lowers rates and keeps them low for the most part. Marching up right before 2008, rates had started to come up. And when I say rates, I'm talking about the Fed prime or the Fed rate, the Fed funds rate, because that's really what they manipulate, the short end of the interest rate curve. And 2008 hits, and we get another very accommodative policy where rates are low, and that kind of goes up until 2022. Mm-hmm. And you saw a little bit of attempt in there to get rates up, but they've just been low for decades.
You called it artificially low. Is that an accurate assessment?
I think so. I look at the job the Federal Reserve does, and they're trying to keep employment full and inflation down.
Okay.
Those are two difficult things to do, right? They've got a couple knobs and dials. Some of those knobs and dials they've gotten a little fast with, but things like money and interest rates, those are subject to supply and demand, just like toilet paper on the shelf in the grocery store.
That's right.
And so when you artificially move dials because I want this to go up or I want this to go down, there's always unintended consequences, which is absolutely what we've seen and why this environment feels very difficult right now for people. Mm-hmm. And so, I think to me, the really interesting story with our current environment and interest rates starts with COVID.
Got it.
It's kind of the event that sprung into action a lot of just really, really interesting things in the banking industry. Okay. So COVID hits, the world shuts down, and everybody's like, what do we do? The government just shut my business down. So the government says, well, we just drove a truck through your front window, so I guess we got to help you fix and get through it. Mm-hmm. So their decision is twofold. They're going to put a bunch of money into the system, and they're going to keep interest rates really low. So those are the two solutions. Hey, we're trying to shut this virus down, so we're going to quell the economy, and then at the same time, we're going to try to prop it up by doing these other things. So a couple things happened. The first thing, if you were a small business owner in March, April, well, I guess it would have been early April. I remember it was my wife's 40th birthday.
Okay,
and I've never worked so much in my life because this new program comes out called the PPP program.
Oh yeah.
So it's interesting, as a bank that was distributing PPP money. I actually found out about this program watching Mark Cuban be interviewed on some show. I'm like, well, that's weird. And he just said community banks are going to do that. I haven't heard anything about this. So within a matter of weeks, we stand up this program where the government has basically said, hey, we're going to give small businesses loans. They're going to be forgivable. And the purpose of them is to keep people employed.
Oof.
So we went from not knowing what's going to happen to all of a sudden we're designing and building systems and hiring extra people to help and making these loans. And, for a banker to look at a loan and not have any financial information, any sort of, can this person pay it back? It just, it felt really weird.
Yeah.
And,
just divvying out money.
But we did it.
Yeah.
And, what we saw, that stimulus hit and it affected banks and their balance sheets overnight. You go back to 2008 and you get some of the TARP stimulus, some of those programs designed to help banks through it. Totally different. Integrity Bank never saw a dime of that. It never affected us. It never gave us extra money to lend, nothing. The PPP program, however, put money in people's pockets, which they took and deposited into banks. And all of a sudden, banks had so much cash. And it happened overnight.
Wow.
So interest rates are really, really low, and banks have a ton of cash. So we're out there just chasing deals. Every bank wants to make loans. There's not enough loans to go around. So that pushes interest rates down even more. And, I think of what was happening with interest rates and some of the deals we were looking at. It was bizarre.
Yeah.
And like, that's not a good long-term investment for us. We can't cover our overhead. But there was nothing else to do with that cash. And so rates stayed really, really low for a while. And then inflation starts to creep in. And you can go back to 2020. I can anyways. And having conversations with my wife, like, man, our grocery bill was really high this month. And that's by the way, my best metric for inflation is like, hey,
the grocery bill. Yeah.
What did it cost to go put food on the table?
Yeah.
It still gets more and more expensive.
That's right.
And so, but we saw inflation and the Federal Reserve kept using this term transitory, meaning it's just temporary, guys. Don't worry. And if you go back and you look at the minutes of the Federal Reserve meetings, that word through 2020 and 2021 is used over and over and over again. And they used it as an excuse to not raise interest rates. What raising interest rates would have done, it would have just slowed the momentum. It would have made it so you don't have too many dollars chasing too few goods. And so we lived through 2020, we lived through 2021, rates were super, super low. The Fed kept saying inflation's transitory, and then 2022 hits, and I think there just was a time where everyone's like, this inflation's not going away.
That's right.
We got to do something. So what they do is they raise rates extremely fast through 2022. And it just caused all kinds of problems in the banking industry. We saw that through the failure of Silicon Valley Bank and Signature Bank, some of the biggest failures around, and just the overall industry has seen our margin. So banking 101, it's really simple. Banks borrow money from depositors. So I look at my checking accounts, my CDs, my savings accounts, my money market accounts. I'm borrowing that money from depositors. Then I take that money and I loan it out to people that need loans.
That's right.
I borrow it low, I loan it out high,
Mm-hmm.
and I keep the difference.
Right.
It's an arbitrage game. It's simple.
Correct.
When my costs to borrow go up, but I can't adjust what I'm loaning out to people,
Margin
that margin
degradation.
shrinks.
Yeah.
And we have just seen tremendous margin compression over the last couple of years, industry-wide.
Mm-hmm.
And that phenomenon is what caused Silicon Valley Bank to fail, in addition with a good old-fashioned George Bailey, It's a Wonderful Life bank run.
Right.
Except it was done, I heard all kinds of stories of these Silicon Valley executives on the ski lift, on their app, saying, "Oh, let's get our money out of Silicon Valley," and they're calling all their buddies. And so it wasn't everyone banging on the door. It was people. It was an electronic run.
Isn't that amazing?
And so the problem with a lot of banks and what happened was we go back to 2020, 2021. Interest rates are really low. There's not enough loans. Well, let's go buy some government bonds and let's at least get a little bit of return on our cash. And you go and you buy a 10-year government bond and deposit rates are zero. Checking accounts were paying zero. Savings accounts were paying roughly zero.
Yeah.
And deposit rates start to go up, but you can't get out of this 10-year bond. In Silicon Valley's case, they were 30-year bonds. You can't get out of it. You can't sell it. And if you do sell it, the value of the bond and interest rates are inversely related. So interest rates go up, the value of those bonds go down. You got to take a loss. And it really put a lot of banks in a tough spot leading into 2022, 2023. Mm-hmm. That's been, it's been interesting to watch the industry navigate.
I bet. How do we look today?
We look good. So what the fix to that is time to allow some of these bonds to mature.
Yep.
You can get your cash back as a bank and you can redeploy it at market rates.
Copy that.
You work with borrowers. You figure out how to get a decent return for people that deposit money into your bank. And so those funds stay. And banks have done a good job of repositioning their balance sheets over the last couple of years. It's been roughly 2 years since Silicon Valley Bank failed.
That's right.
To where margins are starting to come back and banks are starting to be more active and profitability is coming back. And, you know, it's really important for the industry, but also for the communities that you have good, profitable banks. Mm-hmm. Banks have to retain earnings in order to grow.
That's correct.
And in order to support their communities as communities grow. And so it's just important for communities that they have a good, strong banking system. And so, you know, there's still a concern on liquidity. Mm-hmm. Liquidity being access to cash to lend out, and it's more expensive to borrow for a bank. The other piece of that we're seeing on the liquidity side is just making sure that we've got enough cash around to let depositors have their money back. People have spent a lot of, if not most of the money,
I would imagine,
from the stimulus. Mm-hmm. Businesses have spent it. And so there's just more limited cash out there, which makes it more expensive.
Indeed. Well, I want to come back in the fourth quarter with you, Brett, and get a sense for, like I said, where you think we're going. Interest rates, you think you don't think they're going to come down really quick. You think they're going to kind of hover a little bit. And I want to get a better understanding of that more in detail and let you unpack that, as well as how it's going to impact our local real estate market and some other things. We're back with Brett Wyss, President and CEO of Integrity Bank and Trust here in Colorado Springs and Monument. And he's also going to set up shop downtown Colorado Springs. We're back in a moment.
My experience with Colorado Springs Orthopedic Group has been top-notch. The whole orthopedic group, they've worked very well together. Even when I've gone through PT or needed to get my collar prosthetic, everybody's been just right on top of it. It's all centralized and the communications have been awesome. Even though I had my nervousness about going into surgery, I was still very confident. I knew I was going to be okay. Colorado Springs Orthopedic Group is definitely getting me back to my life and the things that I want to do.
All right, Business Digest Weekly on a March 7th. You are a mere hour and 15 minutes away from your first, I think we're moving into cold toddy season. What do you think?
Let's bring it.
Let's bring it, man. They say banker's hours. I always get a kick out of that because these guys work hard. These guys work really hard. But I'm encouraging you to take a banker hour. After we're done with this conversation with Brett Wyss, it is time to go home for the weekend, ladies and gentlemen, and enjoy it. You put in a nice hard week, as have we, and we're going to go out there and enjoy our beautiful Colorado lifestyle. So anyway, we've had a great conversation with Brett, and if you've missed any portion of this, I invite you to go back. You can find us on Spotify, iHeart, and Apple Podcast as well as YouTube. And just look up Business Digest Radio. That's how you find us on any of those platforms. And you'll see our logo there. Click on it. Look for the Brett Wyss interview. And the first couple parts, we got to see how they got started in the family business here and planted their flag up in Monument and northern Colorado Springs, and now they're going to open up a shop in downtown Colorado Springs. We'll get to that in a minute. But in the third quarter is really where we started to hit stride here in understanding how we got here with interest rates and why we made certain decisions, why banks had to go through what they had to go through, and then subsequently us as consumers. And then, of course, the Fed just opening up the Treasury and pouring funds in, printing money, and we had a serious bout with inflation here, and I still think we're feeling the remnants of that. And the interest rates, Brett, still kind of reflect a discipline that needs, in your estimation, as far as I understand, they need to be held there for a bit. Unpack that a little bit.
Yeah. So, I mean, you can think of money like we talked earlier, it's supply and demand. If there's a lot of money, you can go out and buy a lot of goods, which really puts the supply low on goods and pushes prices up. And so having a lot of money in a system is inflationary. And we've all seen it. We've all felt it. Family budgets are affected and wages haven't kept up with the inflation we've seen. So in order to slow that momentum, you make money more expensive. You take money off of the table, and then there's not as much money to chase those goods. And the people selling the goods are going to ease prices or hold prices in order to get rid of them because not as many dollars are chasing. And so if you look at it from a supply and demand standpoint like that, it makes sense to keep our rates higher, take some of that money off the table, and slow things down a little bit so prices don't continue to escalate as fast as they do. Inflation it's a nation killer. It is, if you're on a fixed income, it's terrible. And the number of stories we hear about my income's stuck,
right?
Whether it's Social Security or a pension or just you're an entry level worker and businesses are unwilling or unable to raise wages as fast as inflation. If your income's stuck and prices keep going up, you're effectively making less and less money, and that's a big problem that we're seeing right now.
Yes, it is. A lot of folks are hurting out there, and obviously they're tightening the bootstraps everywhere they can. Is the same apply to banks as well?
So I mean, possibly. Our struggle is to find funds to lend, right? So with all that money coming off the table as the Feds change direction, we have to entice borrowers or depositors to come or borrow money. And so that's the struggle, is to find those funds that are cost effective to lend, certainly at these elevated rates. And so it just makes economic activity a little slower, which we're seeing.
Absolutely.
Which is what should happen to get inflation under control.
So I'm a business owner, or there's business owners listening to this throughout the region. Maybe they're in a startup, maybe they're, in an accelerated mode or stage 2 even. And how would you recommend an individual or a business look at selecting a bank, Brett? What are some of the criteria you would encourage them to think through before they say, I'm just going to go to that big, huge bank that I've seen forever?
Absolutely. Well, so I think it's really important to know your bank. Certainly if you're going to be a borrower, a small business borrower in particular. Banks are partners. And when things are good, you could borrow money from anyone, and it wouldn't matter.
Right.
when things are not good, you want to know who you're working with. And that is, as I had said earlier in the segment, one of the things I'm most proud of is how we dealt with our customers going through difficult times in the recession. We want to work with people. We live and I was raised in this community. Mm-hmm. I love it. Our vision, our mission at Integrity is to have an enduring impact on the community. We came up with that in 2006 as a group and thought, what statement do we want to make about our presence here? And we came away with, we want our presence to be felt. If we were to leave, we want the community to be like, man, we miss those guys.
Right.
And so that's what we've really tried to do. Banks offer most of the same things. There's very few products that any bank doesn't offer. And so, but one of the things that we've done as a small community bank is put together a suite of products and businesses that rival the big mega guys. We've got a commercial bank. We do consumer lending and deposits. We have a wealth management division, and we manage wealth for people.
Yep.
We have a investment bank. We help people buy and sell their businesses. And so we're kind of a full service suite of companies that can take somebody from that junior checking account all the way through
treasury and selling your business.
Absolutely.
Yep.
So we take people through the life cycle.
I love that. Tell me what you see on the real estate front. We got an interesting dynamic here in El Paso County. We do. There's, I was looking through some numbers. We're always looking at numbers. We make a lot of loans against 1 to 4 family real estate, whether it's construction lending or primary residences or investment, do a lot of fix and flip activity. So I've got my eyes on those stats all the time. And what we're seeing is a shortage right now. So one of the stats I wrote down by 2028, a group estimates we're going to need between, let's just say 30 and 40,000 units built to meet our growing population demand. Well, you go back to 2024 and we brought online 3,800 units. Okay. So that math doesn't work, right? We're looking at a potential 12 to 25,000 unit shortage. And that's units. So a big apartment complex, it would account for all of those units. What that means is we're not building enough homes for the people that are expected to move into the Colorado Springs area. That keeps prices up. There's not as much supply of homes. Demand goes up. Prices go up. On the other side of the spectrum, interest rates are high. That makes affordability difficult. Then you get real estate taxes. We've seen taxes go up tremendously because of these growth in values, and insurance costs. Insurance is a massive concern of mine. Okay.
So you add all these things, and housing, in my opinion, doesn't look like it's going to be getting much cheaper. We've seen a little bit of softening in prices, but I don't see a big reduction like we saw in 2008, 9, 10 with the Great Recession. So we've got these forces that are keeping prices not artificially high, just keeping them high when intuitively you'd think, well, prices have to be coming down.
Right.
They're softening a little bit, but not like a lot of people thought. And then you add interest rates are just going to stay up longer for some of the inflationary things we talked about. I think we have a fairly flat housing market over the next year, 2 years with very low momentum.
Okay. Yeah, because the builders they can't keep up right now. I mean,
development takes so long.
Yeah.
You're 2 years out before, at least, if you buy a plot of land before you can actually go vertical.
Oh.
It just takes too long.
Yeah, it does. And that obviously discourages folks, and they start to look at other opportunities in other communities who might be able to accommodate a little quicker. I see the formula. I see the formula you're looking at. But over history, I mean, our interest rates are still relatively low.
Yeah.
That's what a lot of folks that are new into commerce don't understand.
And I think if you just isolated housing mortgage interest rates, our current situation would feel very different. But when you add the inflation in groceries,
That's right.
when you add the taxes, when you add insurance, when you add all the costs we're seeing, what you have to pay for a car, my goodness, if you want to go buy a brand new SUV right now, 6 figures.
Yeah.
When you add it all together, housing just seems unbearable.
Right now
Right?
it does. Yeah. We need a loosening for sure.
Yeah.
Any light at the end of the tunnel as far as you're concerned? Or are we just going to have to muscle through these next 12 months?
I think there's possibly a new normal.
Okay.
Where we just have an expensive housing market and multiple jobs and ways to earn income. You're going to see people get creative.
Mm-hmm.
I think people are going to deploy a lot of new technology. I really am a big believer in AI that if you're a business and you're not deploying that to create efficiencies within your business, you're probably behind the curve already. And I would encourage people to look in that. It's going to be just allow you to be more efficient and to do more with your people and help generate more profits. And so, but I think as far as, hey, if we wait, prices are going to go down 30% and all of a sudden everyone's going to be able to afford a house again. I'm not sure I see that.
I don't
so
either.
there's some new normal to get used to.
No, I think you're spot on with that, Brett. Well, I want to, I could go on with this, and I think we're really hitting the meat and potatoes of this conversation, but I do want to give you an opportunity to talk about your bank downtown. You guys are finally going to open up a shop downtown.
Yep.
What was the impetus for that real quick?
So, I mean, I've been here a long time. I go downtown 15 years ago, and it felt like it was dying.
Mm-hmm.
And then I was downtown for something a couple of years ago, and it's vibrant, and there's stuff happening.
A lot going on down there.
We're starting to get some culture and some arts and
Good food scene.
Yeah. I'm like, I need to be downtown.
Okay.
And so started looking and found a little gem of a spot right on Rio Grande in South Nevada, and we're going for it.
What do you think? A year from now or?
Oh no,
6 months?
I started construction.
Okay.
By July.
Okay. Congratulations.
Maybe August.
Friend.
Yeah.
Very
I'm
good.
excited about it.
Integrity Bank's coming downtown Colorado Springs. Brett Wyss has been with us. He's president and CEO of Integrity Bank and Trust here in El Paso County. It's been a privilege to talk to you and a pleasure to understand kind of how some of the filters you look through as you're lending and counseling folks in small business and consumers as well as to how to navigate the times we're in because they're challenging.
It has been a pleasure, and Dirk, I appreciate the opportunity. And
Absolutely.
very impressed by what you're doing here.
Yeah.
So
Well, we appreciate it. And folks, I hope you enjoyed this conversation. Again, go back and rewind, especially the third and fourth quarters of this interview. Brett provides some real pearls of insights and wisdom as to how we can navigate these times. Well, folks, we'll see you next week here on Business Digest Weekly. Have a great weekend.
You've been tuned in to Business Digest Weekly with Dirk Hobbs. If you'd like to be considered for a spot on our show, email us at info@coloradomediagroup.com.